Billions to Trillions to Action, Mobilizing Finance for Development 2016 to 2030. African Development Bank, focus on attracting investment to Africa, with Donald Kaberuka.
Africa 50 is an instrument, a vehicle I've set up where the African Development Bank is a core investor to try and demonstrate that projects in infrastructure can be at once transformational and commercially viable. So we, the bank, and private markets are coming together to do that. So we do de-risking, we prepare the projects to bankability, and we co-invest with pension funds, insurance companies, and other institutional investors. Remember, in the past, they were happy to buy assets which were already an airport, a port, a railway. So they know the asset class infrastructure. What they don't like to build it. Too many risks. Issues of liquidity, mismatch. So we come in to try and resolve those mismatches. So we are hoping to launch Africa 50 in Casablanca end of this month. We have just completed the first closing, just under $1 billion. I don't think there's another way in which the infrastructure gap in Africa can be closed except by attracting private capital into this space. Institutional investors are fiduciaries. They hold pension money, they have to pay pension 30, 40, 50 years. There are very strict regulations. There are very strict formula for allocating their capital. So they will not come simply because we want them to come. They will not come simply because we want to build infrastructure. They will come because they see a return which will enable them to pay their pension in 30, 40 years. Now, you have to demonstrate to them that their concerns, which will be a good return, liquidity, the risks, that all those things are packaged. If it's done, these people will look at it and say, wait a minute, it's an asset class like bonds, like equities, and take a look at it. Now, I don't expect you have a big bank. I think it will happen by learning over years, but I think it will take some time to come to a point where you say, here's a project, please come running. You have to demonstrate that there are concerns, which are, I say, return, liquidity, security, are taken into account. There are other projects which are very attractive to private capital. Now, already, telecommunication, optic fibers, marine cables, because they can be structured to be attractive to businesses. That's why we come in that place, to de-risk them. Number two, to be the first on the block, to show them the risks are not as high, that the asset class could be interesting, and also to help in preparing the projects to the level of bankability. We can recover some of the money, and that we have done anywhere between $1 and $1.2 billion a year. So it's about de-risking. It's about being there first to demonstrate how it can be happening. It's about policies. In the 1990s, especially between 1994, there was not much private money in the African telecommunication sector. The like of Mo Ibrahim and others, who were the pioneers, came in the mid-90s. Before that, telecommunication was entirely public. So evolution in technology and also evolution in policies, especially deregulation, made telecommunication and IT infrastructure very attractive. And now those guys no longer need anybody's guarantees. They just want policies to be right, property to be respected, regulators to be in place, and money is flowing in the Indian Ocean, submarine cables, in the Atlantic. And I do believe that if the policies improved, the same could happen in energy. And we are seeing the beginning of that. There are some countries rich in natural resources. So naturally, the starting point is a better use of the revenues along the value chain. There are other countries who are not as well endowed. But the revenue mobilization domestically is below potential. Less than a dozen countries mobilize about 15% of GDP in revenues. That is too low. So improving the tax base and improving revenue mobilization. There are other countries where you are seeing poor public financial management, because it's one thing to mobilize money, it's something else to use it well. So the answer to your question is, it depends on the country. There are a lot of efficiency to be gained along there in terms of leakages and use of resources. In some countries, we build capacity for revenue mobilization and public expenditure management. In other countries, we help negotiate better natural resource contract and then moving up the value chain. In other countries, we help them deal with vulture funds and the other forms of illicit flows, again, depending upon how it works. Where we stand today, foreign aid remains extremely important in the humanitarian area, to call the fragile states, those who have come out of conflicts. However, in steady state countries, we now think the best use of foreign aid is to leverage private capital. Given the fact that 80% of expenditures on development is now domestically generated, it's only a small percentage which is accounted for by foreign aid outside the countries I've just mentioned. So here, we think the best way to use it is not a closed envelope, dollar for dollar. It's to use to leverage private capital, where the money is